And in our business stories, the UAE Central Bank has issued draft rules aimed at getting banks to lend more to small and medium-sized enterprises or SMEs after some lenders had cut their exposure to such companies or raised their charges. According to local reports, some banks have had to make huge provisions in the past 18 months against bad debt, much of it relating to SMEs, which account for around 60% of UAE's gross domestic product. To guard against further defaults, some banks raised lending fees to the sector or withdrew from lending to such companies altogether. In a draft regulation seen by news agency Reuters and circulated to banks in recent weeks via the UAE Banks Federation, the banking industry group, the regulators said all banks had to have a dedicated unit in place for SME lending, steered by an SME lending strategy and policy. It added that banks should have set targets and limits for SME lending and would be encouraged to support UAE national entrepreneurs. Banks would have to provide an explanation to the central bank in cases where lending to SMEs falls below their target. Under the proposed new rules, banks should also not impose unreasonable collateral requirements in return for lending and should provide borrowers with explanations in cases where they refuse to lend to the sector or withdraw credit. And the net income of Arabian Gulf banks is forecast to drop by 5 to 7% this year as the sector grapples with weak revenues and higher credit losses. According to Standard & Poor's, bank profitability decreased last year amid a rise in money set aside to cover bad debts and slower loan growth as economies in the region slowed. Banks are also suffering from tighter liquidity and slow asset growth. Government and government-related entities or GREs deposits, which account for 20 to 35% of total Gulf deposits, have also declined. Asset quality has also suffered as banks are increasingly exposed to weak sectors, leading them to make higher provisions to protect themselves from non-performing loans. Analysts from S&P further added that in 2017 we will see a visible increase in NPL formation. The ratings agency also explained that there is unlikely to be an uptick in corporate bond issuances this year given the current economic environment, but new corporate names could come to the market as they did last year. The credit rating agency, which has downgraded the ratings of Oman, Saudi Arabia, Bahrain and Sharjah, expects a stabilization in the outlook for Gulf sovereigns with the exception of Oman, which has a negative outlook. The average annual rent for an apartment in Dubai fell to 114,000 dirhams in January, down 3% from the previous month. That's according to a new report. Real estate website Bayut also said average rents in neighboring Abu Dhabi rose by 3% to 120,000 dirhams. During January, Bayut said average rental yield for all apartment types in Dubai topped out at 5.72%, but yields in individual bed categories and areas were as high as 10%. Its report said in the studio apartment category, average rent in Dubai was recorded at 51,000 dirhams per annum, down 4% from December, while rent for one-bed unit surged during the month, rising 5% to 90,000 dirhams. There was a 2% improvement in average rent for two-bed units in Dubai, while three-bed unit rents also increased 2% to 191,000 dirhams. Bayut said larger units in the 4-plus bed category commanded an average rent of 344,000 dirhams in January, up 10% on December's value. In Abu Dhabi, the average studio unit's rent held its ground at 48,000 dirhams and one-bed units' rents rose by 1% to 85,000 dirhams. However, Bayut reported that two-bed units saw average rent falling by 2% to 122,000 dirhams, while three-bed apartments' average rent also fell by 1% to 164,000 dirhams. Nearly three-quarters of all economic crime committed in the Middle East during the past 2 years was committed by company employees. That's according to PwC's Global Economic Crime Survey. Survey results showed that despite the region's efforts to combat economic crime, there has been no clear indication that levels in the Middle East or globally have decreased. PwC said that economic crime remains as tough to tackle as it's ever been, adding that although 65% of the survey's respondents cited opportunity as the biggest factor driving crimes committed by employees, 40% of respondents indicated that their organizations have never performed a fraud risk assessment. The survey showed that the four most commonly reported types of economic crimes are asset misappropriation at 49%, procurement fraud at 16%, bribery and corruption at 15%, and cybercrime at 12%. It added that although 72% of respondents indicated that their perception of the risk of cybercrime in their organization has increased over the last 24 months, 44% reported that their organization restructured or reorganized departments responsible for governance and compliance as a measure implemented in the last 24 months to address increased regulatory expectations. While the UAE is ranked first among the Gulf countries on the Transparency International Corruption Perception Index, PwC said that continuous efforts to fight fraud and corruption still need to be made to further improve the ranking across other countries.